Hello, hello, hello. Welcome to Al Stock Trades. I hope this video finds you in great spirits. In this video, we're going to go ahead and talk about a couple of important factors here. There's a lot to talk about, a lot to discuss. Can't wait to go ahead and arrange our monthly meeting in our private stock terminal. First things first, I want us to pay close attention to this graph over here. This is called the Equity Hedging Index. For people that are in our stock terminal, you can go ahead and read the pinned comment and it'll tell you all about the equity hedging index. So we're going to go ahead and look at this image first. Now, obviously, as you can see, these grayed out images are recessions slash bear markets. So you're going to see, the dot-com bust here, 2008, the 2020 pandemic very briefly here before the Federal Reserve started printing money. What's interesting here is we've been talking about this indicator for quite some time. What you can see here is every time this indicator hits this green line section around the 80, in terms of the 80 mark, it's historically has been a great time to buy. As you can see, it literally is able to catch some form of a bottom. Obviously, you can't just use this indicator. You can, but like anything in life, you need multiple resources to essentially assist you. So what we're basically finding here is that a great time to basically get out of the market has been historically when these particular movements hit the red portion of the line. Well, ladies and gentlemen, recently we've hit that red near 2021, and we realized that was a pure example of the market peak. Now what we're starting to see is once we hit this form of the indicator, it's a great time to go in. Now, obviously, not a lot of people like Tesla at 105, 110, but they definitely sure like it at $170, right? And it's just the beautiful part about understanding market psychology. Now, what we're starting to see here is the equity hedging index is starting to collapse and it's starting to go down. And what this basically means is, to me, it's a bullish indicator. Now, every time, as you can see, the rise and fall of the equity hedging index is a pure signal that the market is about to rally. Now, if you go down here, and if you basically look at the equity hedging index now, instead of looking at it from 2001 to 2023, here we're just looking at it from 2018 to 2023. So it's a shorter time frame, so we can zoom in on this fall. Now, originally we fell before, then we started creeping back up, and now we're falling again. And here's the 200-day moving average for the specific indicator. So we're literally doing an indicator on an indicator, right? And what we're starting to see here is, possibly we may have neared or hit the bottom. We don't know yet. But I can tell you right now, we are nearing a bottom more closer than we've ever neared before. Now, there's, a bunch of different types of people. There are people that are dollar cost averaging. They're like, I don't really care. I'm going to dollar cost average. Too much stress. I don't want to miss out on any opportunity. There are some people that are going to just say, I'm going to wait till the bottom, and the bottom never comes, and they're going to have to wait another 5-10 years. And those people are not going to end up, unfortunately doing that well. And there are people who are going to be like, okay, well, I'm going to go ahead and just kind of, once the market starts going up higher on every other spectrum, I'm going to go in and I'm going to go in there. So whatever your part of the puzzle is, that's essentially your type of particular movement. But as you can see here, we're starting to see that the equity hedging index is starting to fall. Now, if we go to the smart money, dumb money, again, this is a larger time frame. Actually, no, this is not. My apologies. This is looking from 2006 to 2011. I just want to focus on this middle section here. Okay. Now, as you can see, when the 2008 great financial crisis happened, it hit a lot of retail investors, but it frankly hit Wall Street hard. Wall Street got effed up. A lot of bankruptcies happened. Lehman Brothers collapsed. Wall Street started bleeding. So this is actually interesting because once the market collapsed, dumb money actually took over. And dumb money was the driver of the market. And soon after Wall Street recovered through all the investigations and what the Federal Reserve did, then smart money basically started to take over. Again, then there was an artificial dump in stocks here. Dumb money sadly sold out while smart money was able to capture, because many people thought that the 2008 financial crisis was about to double dip. So then dumb money unfortunately sold. And then smart money was able to recapture some forms of the losses that they failed to capture when dumb money actually led after the great financial crisis. Now, we've never talked about this before. I just wanted to preface this. Okay. Then, as stocks basically went up, dumb money basically started buying in, and dumb money started doing what dumb money does, while basically smart money sat on the sidelines. Okay. And the story continues as we go through 2012, 2013, 2014, and on. So the reason why I'm talking about dumb money leading the 2008 great financial crisis, same thing is happening here. I don't know if it's the same thing, but I'm telling you, we're seeing a huge spike in dumb money. So could this be the bottom? Could this be the bottom? I don't know. All I know is I calculate intrinsic value, and you guys, for people that have been watching our platform, it's the same thing over again, utilizing our resources. And if a company is undervalued, sometimes the company is around 85 whatever cents. Yeah, then to $1, it doesn't matter to me. But when it comes to companies that, let's say, for example, Apple or Microsoft, personally for me, I think, those companies, there's a lot of better deals out there. So could this be, Tesla going up? Could this be led by dumb money? And could just basically smart money be on the sidelines, or could they slowly be trickling in money? Well, if you go ahead and take a look at Tesla's dark pool, we're starting to see that billions of dollars is being spent on Tesla on the dark pool. And we're starting to see that, especially in this price range here, a lot of them bought heavily near this fall. Okay. And they literally went in hard. And if you go to CNBC, if you don't recall, I'm sure they delete their videos. They brought in a couple of analysts that said, if I was you, I would sell Tesla. I would not buy Tesla. And they told retail investors, sell Tesla, which is very sad, right around the bottom here. Now, we don't know. Could this be the bottom? Again, I don't know. But assuming, let's say, clearly it looks like a bottom, assuming it is, they told them to basically miss out on a 56% gain. So that's why I don't trust CNBC. I don't trust them at all. Again, if you would have done an intrinsic value calculation and utilized the Mastering's intrinsic value, then you would have basically came out with an answer. It's unfortunate because literally CNBC told people to sell. Really screw those people. So it's very sad. They really pissed me off. So now the battle really is with the Feds. So you think the Fed is going to stab us with a 50 basis point? If it does, the market will tank temporarily, in my opinion. Possibly. Could be. Honestly, the best thing is just do the whole thing, the whole with the intrinsic value, right? So that's pretty much. I just wanted to. The biggest thing I wanted to point out with you is is to give you guys a history lesson on smart money, dumb money back in 2008, going to 2009. Dumb money could take on the lead, and eventually they'll get their way. Smart money will eventually get their way. But overall, I'm still in the market, right? Do I, is there cash in the side? Of course, like there always should be. Am I prepared for a larger crash? Well, yeah, of course. Who doesn't want to be unprepared, right? But overall, it may seem that we are nearing a bottom, and it's all the economic discussion now with the Federal Reserve. Yeah, JP Morgan is telling retail to sell and take profits. Since when do big boys care? Exactly. That's what I'm saying with the whole Tesla telling in CNBC, I remember the guy was reading it, and here's the thing, guys, it's hard because sometimes I internalize. You got to be careful because sometimes you internalize this and you become a bear yourself. Understand these hedge funds, they psychologically try to F with you, and you got to be careful. So there's a lot of shorts that are about to cover soon in terms of stocks that have a high short interest. What we're basically starting to see with a lot of these companies. But overall, if you look at the bullseye in terms of January 23, I just want to see recent. I see more. So again, you see this blue here, it's like a green. I see more green than I do red in terms of bullishness. If you look at the golden sweeps, again, I see more green. I see more hedge funds that are big money with over $1 million premiums, $1 million premiums. I see them, more calls on the short term than I see puts. I mean, just look at Lucid here, right? So, it's definitely a lot of data to take in. We are starting to see a shift in the sentiment for all the people that are our beloved Clover subscribers. Just a very quick and dirty intrinsic value. If you go ahead and just take a look at Clove here and go year to date, we're up 31%. 31%. So what I'm going to do really just quickly is I'm going to go for 10 years. I'm going to do, let's say, 2,300, and I'll do a 5% margin of safety. Not 5%, sorry, a 5% of the revenue to estimate the free cash flow. I'll put in about 115. And then I will do, let's do a 25% growth rate. But for the discount rate, I want, well, first let's do the shares. 480. Let's say what's it, 477. So this is, let's assume this is we're doing 25%. We're doing the bottom of like the bottom bare of the price targets. What I want to do now is I want to make 31% every year. So assuming that Clove doesn't go up anymore this year, $1.25 is the highest it's going to go up this year, which sounds unlikely, but again, let's just assume. If we do a 31% discount rate, we get a price. We get a price target of $2.41. So essentially, so what that tells me is if I want a 31% year over year for Clover, I need to buy Clover at $2.41 based off of these short projections. So this tells me that, Clover could go up higher than $1.25, which means that we may see Clover in the next year, 2 years, especially in this, really unstable type market that's really just really not comfortable market. You feel it, right? Especially coming out of 2022, you can $2.41. If I said what I'm trying to say is imagine if Clover read $2.41 right now. Clover's price was actually $2.41. I would make 31% year over year on average. We could have another 2022, but in the next 10 years, if you average up all of those 10 years, I'm going to be making 31% year over year if I buy Clover at $2.41. That's essentially the average. Now, you might be asking yourself, you're like, wait a minute, I've never seen the intrinsic value calculation used that way. Well, there's a lot of tricks within this intrinsic value that we teach in the mastering course. There's a lot of hidden features that, that this thing can do, right? So at this, what I can look at from this angle, this $1.25, if we do a 50% discount rate, we're at $1.09. So let's go to when Clover was like 86 cents. Okay. Let's do a 55% discount rate. Okay. 56% discount rate. 57% discount rate. 58% discount rate. 59. Let's do 58. So we should technically from whatever the year ended, about the year, fine. The year started 95 cents. So we'll just downgrade our intrinsic value to 54 cents. Let's do 55%. So on average, we should be up 55% year over year for the next 10 years for Clover. Our stock price should grow 55%. So, it's that's essentially, what we should see. Now what I want to do, and I've never used our projection calculation to answer this question, but again, math is math. If we go ahead and put, let's say 95 cents, this thing was not designed for this, and I'm trying to see if I can work it in. So let's say 95, and we grow 55%. Yeah, no, it doesn't work that way, sadly. It doesn't work that way. I mean, we can make it work that way if we do this. But yeah, sadly, I'm not able to answer. So what I want to do is essentially I want to grow out 94 cents, and I just want to grow at 55% year over year. So I mean, honestly, it's you could do an Excel spreadsheet with that, but overall, from 95 cents, I expect the stock to go up 55% based off of this calculation. All right, 25% growth rate. We'll see right now what 2023 holds. Are they going to grow 25%? But overall, based off of this and based off of the current projection of 31.58%, we could see in the next year a stock price at $2.34. Now, ideally, once Clover becomes free cash flow positive and we hit up 10%, which is what's going to end up happening, this is the type, this is the price areas that we're going to end up seeing. And once they prove they're EBITDA positive and they're free cash flow positive, and once the Federal Reserve not only stops the increase of interest rates, but goes ahead and decreases interest rates, then what's going to end up happening is this growth rate is going to start going up. And when that growth rate, let's say, for example, goes up, let's say 65%, right? We're going to get to a position where I'm not saying that they can grow 65% year over year for the next 10 years, but you're going to see a bunch of naive investors take it up this high. And, you might ask yourself, like, how is this possible? Like how could this be? Like, how could a stock do that? Well, you have to ask yourself that we have never seen in the lifetime of the stock market. It's very hard to see a 95% drop. The last time we saw something like this was in the dot-com bust. And the companies that come out of that, again, it's all about survival. The companies that come out of that are going to be deemed very successful. Now, I'll leave you to this, and this is very interesting. I'll leave you with this. We went ahead and recently changed our layout here. So in terms of earnings, we can click this really quickly. It'll take us to the earnings area. If you go on Wednesday, Humana is about to report on Wednesday. So I'm looking, we're going to be looking at that to see what we're going to send. Here are the estimates, and here that's what the revenue is going to be. But we're going to see how that the market's going to handle that, and how that what they're going to say, and essentially how that is going to tie into Clover. Okay, all right. The tool's so handy. Thanks for sharing your knowledge. Hey, man, I really appreciate it, right? I appreciate it. Poor still at 76%. I started at the worst time buying, the worst. And that's the thing, man. We all learn. We all learn. Good evening. Good evening. Good evening. Hopefully we see positive cash flow on this quarter report. I doubt it. I welcome it, but I doubt it. I think we need about a year. I think Clover 2025 is going to be good. Again, this is how investing works. It's like a farm, right? It just takes time, right? So that's overall, what we want to discuss here. The biggest thing was with the smart money, dumb money. Again, for people that are interested in our platform, if you go here to alstocktrades.com and go down here, we do have a 7-day free trial of our stock terminal, which is our software, price targets, and private stock group here. And this is a little bit more of what our stock terminal is. And here's the articles that you can click on that we've been featured on, such as Yahoo Finance, Bloomberg, and whatnot. And then here's some testimonials from our wonderful members, and we have members from all around the world. And you can start your 7-day free trial right here, and it's risk-free. All right. So we definitely encourage folks to look at this because there's a lot of information here. In terms of our real-time, there's what is it called here? Interactive charting tools. We finally have interactive charting tools. So I need to create a check mark there. That's one thing that the stock terminal lacked in the past, but now it has. So I definitely we need to update that, but it can do more than what is advertised. Yeah, I hope to see you guys on that. And as we grow our community, more intelligent investors come in, and we do more due diligence that we share on our private stock terminal chat group here. Okay. Well, I hope to see you guys on the next one. And it's been a while since we've talked, but I just wanted to update you on the smart money and dump money and equity hedging index. All right, folks. Have a wonderful good evening.